Hey everybody, hope you are having a great week. We are fast approaching the tax deadline of April 15th, and we get calls all the time from our clients asking, well, what can we do to save tax dollars? What are the options going forward? How can I save money for my tax return on 2014? And part of our job, our firm as a certified financial planner, is to help the client pay as little as possible to the government, and so that you're able to keep as much as you can in your pocket. So some basic tips. Now this is going to be able to actually save you some taxes for 2014, is contributing to your retirement plans. If you have an IRA, if you have a SEP IRA, then you are actually able to contribute money now, and it's going to go against your 2014 tax return. So what that means is if you put in $5,000, you are now taxed on $5,000 less if you make a tax deductible contribution to an IRA. And if, let's say, you're in the some of the higher tax brackets and it's 40% net tax, then that's going to save you $2,000 on your taxes. You'll either get that back or have to pay that much less. So you're putting money into your own pocket versus putting it into the government's pocket. Something that you can do going forward, and this is something we do with all of our clients, is the asset location. So if we take investment X and investment Y, and investment X returns 5% and investment Y returns 5%, but in one account, we are taxed at our tax bracket, so we only get to take home 3%. And in the other account, there's a 0% tax because, let's say it's in one of these retirement plans, then we actually get to take home the full 5%. Just putting the right assets in the right type of accounts is a way that you, the client, can make sure that you're maximizing what you're putting in your pocket and not having to pay out. One of the tax credits available, I don't know when this expires, but $5,000 state of Georgia tax credit, $7,500 federal tax credit. That's money that you actually are just paying less in tax. If you owe $7,500, that's the best deal there is in the tax code, then you would have to pay $0. If you buy an electric car, $5,000 if you lease an electric car. Some will even give you the deal if you lease the $7,500 plus the $5,000. This is something to think about. Now, gas prices have gotten cheaper, so it doesn't seem like quite as good a deal, but still, this is a way to save taxes looking forward for 2015. Also, some other things you can do: education credits. It depends on your income, and it phases out for a married couple filing jointly, but you get a $2,500 federal income tax credit if you're making under $160,000 a year for the first $2,500 that you pay towards education. Knowing that, taking advantage of that, is something that's very important. That's a credit too. That's the best. Up here, you've got deductions. The credit is as good as you can get as far as the tax code goes. Going back here, some other unique and strategies you can use. If you do not have any IRAs and you're above the income limit to contribute to a Roth IRA, you can roll money, or you can actually make an after-tax contribution to an IRA and then convert that to a Roth. Because there's not going to be any growth because you do it right away, there's no tax due. Some other unique strategies to utilize and think about going forward that you should implement. If you have any questions about this, call us at 770-984-2312. Visit our website at baerwealth.com. That's BAER wealth.com. Have a great week.